Well, good morning, and thank you for the invitation, Graham, and the introduction earlier about being involved in this field for so long. Actually, in thinking about this talk, I thought it's actually quite daunting because I'm giving a talk to a room of currency geeks really working on this stuff day to day. I mean, it's an amazing program you've pulled together, and it's actually quite funny that I would give such a talk as this, because as a kid I struggled with maths. I used to think there were three kinds of people in the world: those who can count and those who cannot. But I think some of my problems at school were to do with some issues at home. It was because, it was the best of intentions that my dad wanted my brother and I to do more stuff around the house and to help mum out. And so he introduced this rota system whereby, if we swept the porch, we could mark it on a piece of paper on the fridge, and if we watered the garden, the veg patch, again, you'd mark it on the fridge. And it was a great way of encouraging us to do more and to record that fairly and show who was doing what. But one morning we came down and we thought, actually maybe someone had changed the paper. It looked like it had been tampered with, and we weren't sure it was the right rota. So we decided to go buy special paper from a shop, a print shop, with numbers on it, so we would know for sure they would have confidence in our rota. And therefore we got more into it, and we started to add more and more things onto the rota, walking the dog, helping mum go shopping and so on. But one day we ran out of space on the piece of paper on the rota, and we realised we didn't have any more. So we went to the shop to buy some more paper, and they were out of our special paper. So we thought, well, we wanted to keep the system going because it was efficient, meritocratic and fair, so we decided we'd wait until we get the paper before we maintained the rota. So as the days passed, obviously the house got a bit messy because housework was a rota task, and it was summer, and so the veg patch, we weren't watering it, so the veg died. And of course helping mum go shopping was on the rota, so after a week of still not getting our special paper from the print shop, we ended up having just sardines on toast and then just porridge. But I think the real problem was that ironing was one of the tasks listed on the rota, and so Dad had to do his own ironing in the mornings and started being late for work, so lost his job. So therefore we couldn't pay the mortgage, and the house was repossessed. But we felt all along that what we were doing was being fair and meritocratic, and it would have been wrong for us to do stuff for each other if we couldn't mark it on the rota. And looking back, what I really am sad about is that we had put on the list of tasks for the rota feeding the dog. And of course, technically, burying the dog was a gardening task. And so it began to smell, but we didn't really mind because we were being repossessed, and we thought we'd leave the bank with that problem. I think that the cholera outbreak passed over a couple of months, but we didn't go back to that village. But I tell this story as a farce, but the way we run our national household and our global household is actually just like that, just as farcical as if in a family we're not doing stuff for each other just because we can't record it. Because actually our monetary system is a metric for recording who does what. It's a means of exchange. There's no real materiality beneath it, as we heard from Peter. What's important is how it enables us to do stuff for each other, because we are the wealth, ourselves, our skills, our spare capacities, our commitment to each other, our trust in one another, each other, a healthy environment, and so on. And so we've ended up with a system of money whereby we behave as stupidly in my fictional story of my childhood, whereby we stop doing stuff for each other because we run out of the units to do stuff for each other. And the reason we have a money system like that is because the majority of our money, in fact way more than the majority, 97% in the UK or more, is created by banks when they issue loans. So it's digital, it's not the physical stuff of a £5 note, but it's created by banks when they issue us loans. And so they decide who gets the money and at what price. And it means also collectively as an economy we're having to service the debt on the money that and therefore it means that if new loans aren't being created for mortgages, our money supply dries up. And so, just like in my silly story of the house, we end up experiencing a recession, basically a shrinkage in liquidity and a unemployment, recession, etc. Of course, this system also means a mass transference of wealth to those institutions and the owners of those institutions who issue our money supply. So it's not the Treasury, it's not the Mint, it's not the Bank of England that are issuing our money, it is private banks when they issue debt. Notes and coins are a small part of that. And so, if we want to address that systemic problem, we need to really look at how we can free ourselves from the role of banks in controlling the volume and velocity of our money supply and who gets it and at what price. And so, the transition pounds have done something over the last years on that by actually sort of repackaging the national money so it must be spent locally and encouraging local consciousness, and then also creating funds that can be lent to local businesses. So that's one step, that's one way of approaching this matter of how to grow local economies. But there's another dimension to what it means to be local, and that is local issuance. Because if you're these local pounds, what's actually happening is there's an aspect of them which is very much not local, and in fact not British. Because if you look at the banks that are issuing our money supply, they're international banks with very little connection or interest to the UK. And so the majority of Bristol pounds or Brixton pounds are being bought by, well, in fact, all of it is being bought by national money, which is created by an oligopoly of international banks. And so the issuance, the actual origin of the money, is with the private banks. And therefore, we're not addressing that issue if we only tried that model of local currency creation. What we need to see is more of money being spent or lent into circulation by ourselves in our own groups. Basically, where we monetize our trust in each other and the knowledge that we have capacities, we have for future goods and services, and we believe in each other that we will redeem our promises to each other. And that's why when I looked at the program that Graham and the team have put together, I think it is key now that we look at the experience of these kind of collaborative credit creation systems. So it's great that we're going to hear from Sardec, from Sardinia, we're going to hear from the VIR in Switzerland, we're going to hear from Sonante in France, and also, really importantly, we're going to hear from Bristol Prospects, the Prospects Network, because in that case, they've actually built on the success and the support they have from the local business community through launching the Bristol Pound to actually then introduce on the back of that systems for credit creation. And there are strong reasons for why local businesses may wish to do that, because if you're issuing a currency whereby it doesn't have to be bought with national pounds, it means you can provide interest-free credit, you can come up with innovations such as helping people access credit immediately for invoices that their tardy clients are taking months and months to pay. So I think it's really exciting, we're going to hear about that. Now, not only do I think this collaborative credit creation is important for us analytically and politically, ideologically in the way I've said, but it's also really important institutionally for us in the room if we're going to have jobs in this field and a role in this field in future. And that's because of something which is now popularly being called fintech, financial technology. Now, I've learnt about this stuff because for the last year I've been on the board of a venture capital fund in financial technology. And here's some statistics that I've come across to give you a sense of how rapidly things are changing. So in the UK last year, for the first time, more transactions were done electronically than with cash. So people are talking about the end of cash. We're seeing an incredible amount of innovation now, which is, we've also, even just yesterday, there was an article about Facebook looking how to help people use Facebook Messenger on their phones to send each other money. Amazon have just got a license for doing similar things. and there's Android Pay and Apple Pay with phones with near-field communications, so you can have contactless payments. This is a huge field that last year worldwide, $20 billion worth of venture capital went into payment and other financial technologies with the idea that we are nearing the end of cash. This also means then that you see in Denmark, they just last year agreed, they changed the law so that now if you're a retailer, you don't have to accept cash. You can just refuse it and say you only take e-payments. These types of things are going to happen in more and more countries. And so you need to think about what's this going to mean for our own initiatives in this space. I think we actually have a short window for beautiful alternative currencies. I do fear that, I think last week's £40 paid for a Brixton pound Bowie £10 note on eBay, maybe the climax of the alternative money in terms of its cash form. And actually I think in 5 years we may not have local currencies that use anything physical. So we need to really think about that. And so when we're thinking about the future of this work, not only do we need to think about what we are doing, but also what's going on in the wider world. And one of these big issues is the progress in financial technology. Now, of course, what this also means is it's not good enough just to have text to pay and have a few online options, apps that people can download. Because if our e-payment solutions are more fiddly and not the ones that the people are getting used to, then why will people use them? You're going to have to have huge effort to say, well, this is why you should use it. And there won't be the fun and the visibility of using them in the same way as with really nice cash notes. And this is something that I've learned, because I have a background in social activism and NGOs. I used to work in NGOs. And what I've learned from being in the fintech and entrepreneurship space in the last year is there's a different mentality. In the NGO and social change space, the mentality is, if you hear of an issue, like this one I've described, you'll see, how can we do something on that? How can we improve a bit on that issue? And we'll actually see getting more people involved as success. Now in the fintech space, that's a nonsense. Taking part doesn't matter, winning is all that matters. People are putting in billions because they're trying to own the future transaction systems. So there's this level of ambition which is unheard of, I think, often in the social change space. And it's an ambition which comes from a knowledge that you can be really massively successful. And this is the sort of the testosterone, perhaps, of the venture capitalists involved in fintech. But it means we need to think about whether our e-payment platforms and solutions are going to be able to compete with what's coming from Google, from Facebook, from HSBC and all the rest when they get in this. And because of that, I think we need to look at whether we are really working together well enough. Because there are so many separate initiatives, and they're all struggling for a bit of money, a grant here, a grant there, and they're all sort of developing their own platforms and software systems. But actually, if you think about it, if you think about, say, the open source movement, if everyone was working on lots of different issues, perhaps just focusing on their own city, but not contributing to Linux and not contributing to Firefox, etc., where would we be? We'd all be still just using Safari and Microsoft Explorer. So we need to think, not only how are we working locally for local ends, but how are we contributing to global infrastructures in the commons to help everyone in every locale reclaim their credit creation powers. Now, I think in that sense we need to look at where this is working to a degree right now. And so it's really important, I think, that Matthew's here with us, and we're running a workshop tomorrow, because he's been working with community exchange systems, who since 2004 have had a system for people to transact between different local currencies. So these are credit creation currencies. They're not backed by any national money. But the idea is that if you have a surplus in one community or one town, and you want to buy something from the next town, or even get some web design done in another country, then that is possible. And this works through a system called Clearing Central. And it means that the different local currencies need to have common ways of electronically, with a protocol, talking to each other. It's called an API. And they also have to have systems of governance to agree exchanges and balances. Now this is what happens with so-called normal mainstream money and banking already. If any of you have an account with Barclays, but they weren't part of BACS or SWIFT, it'd be pretty useless. You would only be able to pay people or earn money from people who had an account at Barclays. We don't do that. We have BACS and we have SWIFT. So in the same way that it works in banking, we need to think about how we will get ourselves a BACS and a SWIFT. Now, some of you may be thinking, well, how does this fit with the idea of promoting local? Well, it fits because we need people to see greater utility from alternative currencies, independent currencies. And what's really important is not just that something is locally spent, but it is locally issued. We need to create cheap, excellent infrastructures, owned or unowned, in the commons that enable people to issue money locally. We're going to actually be, I think, missing a huge issue if we just focus on money that's created by international banks as debt that we repackage to spend locally. We need actually to create to make it more possible for more people to monetize their local trust in each other and actually spend and lend money into circulation. Only then are we going to actually deal with the big problem of the way that the banks are basically controlling the amount of units in the same way, my silly story at the start, with the rotor on the fridge. So my call today is that we actually look at, although this idea of thinking global and acting local has been very important for the last 30 years and also been very important for the last 10 in the local currency movement, now we need to think local and act global on what we're contributing to in the software space, in the infrastructure space, and the protocols and standards. Because otherwise, I fear that we're just going to become also-rans in monetary history because of this sort of fintech revolution that I've talking about. So thank you for listening. Hopefully that's got you thinking about the kind of questions you're going to be asking of some of the workshops later on today.